Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Now, two key factors at play at the moment. Certainly these bond markets are having a massive impact on sentiment. The huge rise in the yields on bonds and treasuries especially has had a significantly negative impact. Investors are quite cautious and quite concerned about the implications of this rise. Is it the beginning of the bond market bubble being burst? Is it just some sort of equivalent of the taper tantrum that we had in the States? And is it more so the fact that is it just a temporary move that is just taking a bit of money off the table? So the overall impact on the markets is the fact that it's having an impact across Forex markets and also indices as well. Now, in terms of how it's affecting across currencies such as the euro and the dollar, is having a big impact because the bund, for example, the yield in the bund is spiking higher. There's an argument to say that it's an unwinding of the carry trade that's been brought about by the ECB's quantitative easing. Instead of moving out of the euro and using that money to buy equities, such as Eurozone equities, such as the DAX, which had pushed the DAX higher early on in the year, that move is now being unwound and equities being sold off and moving back into the euro. That's pushing DAX down, euro higher. So that's the argument there in terms of the Eurozone. Now, it has had a significant move, and the DAX is under pressure, but the euro is pushing strongly higher. And there's also a fact that in the US, the economic data continues to disappoint, and this is just happening time and time again across the economic data points, pushing back the expectations of Fed rate hike. It had previously been as soon as potentially even summer this year. It's now pushing back towards December, maybe even into 2016 now. So this recalibration of the expectations on the Fed rate hike is having a big impact on the dollar. The sharp correction that we've seen in the last few weeks on the dollar continues, and it seems as though that any sort of bounce in the dollar continues to be sold into. Dollar is being data dependent, and the fact is that data dependency is all well and good, but the economic data has been poor, so the dollar is being sold off on the back of that. So watch out for any US data to drive that dollar trade. So how is this all impacting through the Forex markets? Well, the euro is came under a little bit of pressure in early Monday morning, but now it seems to be finding support, and I still think that the euro is going to be being bought into weakness. And I think this euro dollar trade combined with the two factors that I talked about earlier is basically meaning that you're going to see euro dollar strength coming forward in the medium term. So I see the euro dollar continuing to put pressure on the 1450 to 1530 resistance band. You've got a nice basis of support on the euro now on that breakout above $1.1050. So you've got a nice band of support there just above that $1.1050 area. So any sort of rally correction in the euro dollar is, I think, a chance to buy. Furthermore, in cable, big breakout on cable that we saw, the $1.5550 big breakout level, that 2015 high, took cable to a base pattern breakout, and I think what we're now just seeing is a pullback to the neckline of that pattern. So it's just a near-term correction in cable before I think you're going to see further strength. You see the UK economic data has been tending to be fairly positive recently, and combined with the fact that the US economic data has not been so great, that should generate positivity for sterling going forward, and it certainly looks to be the case at the moment. Certainly this near-term correction, I think, in cable is just going to be able to give you another chance to buy. In terms of the dollar yen, there's been a sideways trading band on dollar yen. Now that has continued for several weeks now and into months really, and it's between 118.30 towards 120.85, and that continues. There's no real sign of that breaking out. Momentum indicators remain range bound, and there's no real signal that we're getting from these markets that there's going to be a breakout anytime soon. The interesting little bit of a relative play between the Aussie and the Kiwi at the moment as well on the majors, because you're seeing potential signs that the RBNZ may well be pushed towards some sort of monetary easing or monetary loosening if the pricing pressures continue to fall to the downside. So that's Forex markets. What about indices? Well, we've seen, as I said, the DAX under pressure with this Bund yield spiking higher, and that's seen the DAX complete a big top pattern below 11,620. Gives us a downside target of 11,850. Sorry, 10,850, my mistake, 10,850 on that DAX trade. And what we're seeing is a bit of a volatile consolidation actually underneath the neckline, but it still looks like it's more of a negative consolidation than any sort of sign of a rally coming. So I'd be using any sort of any rally on that DAX trade as a chance to sell, because I think it looks like it's going to be pushing lower in due course. The S&P 500 has been held back by the strength of the dollar in recent weeks, but that's arguably has been turned around a little bit because we've seen the S&P 500 trying to break out, and that breakout has become on the fact that weak US economic data pushes back the Fed potential for a rate hike. Hence why we're seeing equity markets more positive. However, you're not really seeing that on the fact that it's a positive move for economic data, because you want to see the economic recovery building and building and building for corporate positive news flow. And I don't think that is really happening. That's not really being seen, and I think that could well be a little bit of a signal that may suggest that the S&P 500 might come under a bit of pressure, corrective pressure in due course. Slight moves to all-time highs on a closing basis, but still not really breaking out on an intraday basis yet, and the momentum indicators do not really signal that it's going to be breaking out too significantly to the upside yet. In terms of FTSE, it is in a range trade. It's sort of more of a settled play than the DAX is certainly at the moment, and the FTSE is more, as I said, range bound. It's getting stuck underneath the highs again, high coming in at 7,122, but it certainly isn't really putting too much pressure on the supports either. I think it's sort of fluctuating within that range band. Now, in terms of gold, there are signs now that the safe haven trading on gold is beginning to come through. You've seen all this pressure come through on the treasuries. Certainly I think with that in mind, it's a negative rally that we're seeing on bond yields rather than a positive rally driven by economic recovery. It's a negative move, I think, and that's why we're seeing more of a safe haven trade coming through for gold, looking to break out above that 1224 high, and if it does that on a closing basis, that would imply a move towards 1270, I think, in due course. So what about the economic calendar that we've got coming out this week? Well, there's quite a lot of data coming out across the board actually, a bit of central bank news, certainly, and inflation actually, because we're starting off on Tuesday with the UK inflation. UK inflation remains fairly well anchored at the moment, around about zero on that inflation, and considering you've got wage growth coming through for the UK, that signals pretty decent signs for the economy at the moment. Then you've also got the German ZEW on Tuesday. You want signs of German economic recovery improving. However, in the last month or so, we're starting to see the economic indicators rolling over, and the expectations on that ZEW are for more of the same. Actually, the ZEW coming off the top after that recent improvement that we've seen in the indicators. So that could well be seen on Tuesday. You've also got on Tuesday, you've got the US housing starts as well. A bit of housing data for the US tends to have been pretty positive, the housing starts and the building permits in recent months, but we'll wait and see how that happens on Tuesday. On Wednesday, what we've got out is the Japanese GDP coming through early in the morning. Again, signs that Japan is sort of rolling over the top on GDP as well, and it doesn't necessarily look that great there. Then we've also got the meeting minutes from both the UK the Bank of England and also the Fed. No real suggestion that there's going to be any movement on the Bank of England Monetary Policy Committee in terms of voting structure. So it'll be interesting to see what comes out of those minutes. The Fed's another interesting one actually, because we didn't have a press conference last time or any update on the projections, and it's interesting because the argument was being that the bad economic data coming out from the US was transitory. So it'll be interesting to see how the debate went around that. And then on Thursday we've got the Chinese flash PMIs, so a lot of focus on that. certainly in terms of the risk trade. And then into Friday, we've got the US CPI, the inflation data for that. We've also got the BOJ giving monetary policy as well, and also a bit of German data as well, the IFO, to finish off the week with. So I wish you good luck with your trading, and I wish you well in your trades, and I'll speak to you again next week. Thank you.